Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I'm your host, Sawcruhteez. It has been a little bit since the last stream, so I'm excited to be here today to get to look at some charts. There's been plenty of price action, and as the title says, I believe that this is a very critical crossroads for the price of Bitcoin. Seeing some definitely critical areas that are being tested, and so far things have been holding up and things are looking good today, specifically over the last like 12 hours or so. Been getting a very strong bounce after retesting the local lows, which we were basically what I have been looking for over the last few weeks was for price to come back and revisit that low at 6,500, and then was waiting to see how if it got there and then how it reacted. And we have started to get an answer, or at least some more information, where it looks like the support has held strong and that the demand for Bitcoin in the mid 6,000s is much greater than the supply, and now we're getting a nice reaction to the upside. So things are definitely looking good, but definitely not a time to buy as far as I'm concerned. Definitely not. There will be a number of things that need to happen before I will be turning bullish or looking to buy. This is just kind of the first step along the way, is seeing some strong support down below 7,000. So with that being said, make sure the stream is working, and then we'll dive on in to some charts. Good seeing everybody in the chat. MJ, Marcus, Leo Money, All Infinity, Knocked, Stumbleline. Good to see you guys. Okay, let's go ahead and look at some charts. Okay, so a lot has just happened basically just even in the last 30 minutes or so, as wow, we got all the way up to 7,400. That must have happened very shortly ago. Sure enough, here in the last 15 minutes, ran up to 7,400, and now it looks like we are finding some resistance there, so that is interesting. Okay, so there are a number of things I want to look at. One of the first things is horizontals. Too bad I didn't start streaming about 15 minutes before, because 7,400 is absolutely a significant area of horizontal resistance that we've been kind of keeping our eye on for weeks. So that was basically 73.50 to 74 was definitely a major area that I was watching, and as it got up there quickly to test it, it looks like it is also quickly turning back around. So definitely the two most important horizontals for me are 7,400 and 76.50. Think that there should definitely be a good amount of resistance there, and if we do get above 76.50, then I think it should go up to 8,000, but that's a big if. There's been a lot of resistance built up in this area, so definitely something I'll be keeping an eye on. Something else is a bear channel that looked like it was basically getting taken out here on this candle. Let's see, there's a few ways that this can be drawn. I think I prefer something like this. Let's see. Yeah, there is a couple ways that this thing can be drawn. I kind of like using, actually I like using these closes. Let's see if we can get this up here a little bit, something like that. And then if we can, let's see here, we need to bring that top boundary down just a little. Something like that, where you've got this parallel line right here, and then this one up here that connects this wick, cuts through that right here, this top, then catches this right here, and now it looks like it's trying to break through, but still 51 minutes left. It will be interesting to see if it closes above that threshold right here, and will be very interesting to see if it can create a higher high. I would say that this is the area, about 76 is where we'd need to get above to create a higher high. Until then, it's just another lower low and potential lower high. So it looks like this channel may be getting broken, and that would be very important if it does, but too early to say so one way or the other. Still plenty of time left. Okay. So there were a couple of reasons to expect this bounce, primarily the TD sequential and horizontals. So let's see here. Yesterday I was definitely looking for a bounce due to the red 9 on the 12-hour combined with the red 9 on the daily right there. And furthermore, we were at horizontal support. So something that I said in my analysis yesterday that was provided to the Telegram chat group was that something I pay very close attention to is 9s that occur at horizontal support. That's kind of a very nice confluence of being 9 says that you're kind of oversold, you're exhausted, and then when you're exhausted or oversold at a horizontal boundary, it's really hard to break through major boundaries when you are oversold or exhausted, and that can be horizontal or a trend boundary. Either time, if you've got like a bear trend line and you get a green 9 as you're testing that trend line, that's an area where you should really expect a good amount of resistance, and being that you're already kind of exhausted / overbought is a setup that I pay very, very close attention to, and that's what we were looking at yesterday with this 9 at horizontal support. And I wasn't able to do a show yesterday. I wanted to, but wasn't able to, and it's maybe a good exercise for viewers to, if you have maybe gotten a little bit dependent on the analysis that I've been providing on a regular basis, was day to day there for a while. My objective is to teach you guys so that you can recognize these things for yourself. There's nothing that should stop somebody that's been watching me for a while from identifying this as a horizontal area of support. I mean, I even outlined that in the last video. So that should have been recognized in real time that this is a horizontal area of support, and then seeing when you've got a 9 at a major boundary, well, and even multiple 9s, 12-hour and daily, well, that's really, really important, and you don't need, and my goal is that you don't need me to highlight that for you every single time. We kind of go through these things in real time, and then as I analyze, hopefully you're picking up on some of the techniques that I'm using and able to use those yourself in real time, whether I am doing a stream or not. So definitely this was the critical kind of the first critical crossroad for Bitcoin, was as it was testing this horizontal support and becoming exhausted on higher time frame TD sequential counts. That was a very critical area, and I very much wanted to see a bounce, a strong bounce. I really did not want to see this area of horizontal support break down, and I will show you specifically why. Potential head and shoulders pattern has been developing, and it has been worrying me a little bit because it would have significant implications for the long term if this did break down and confirm. This is a head and shoulders with a bearish neckline with lower lows instead of flat support. That is extra bearish, more so than a horizontal neckline. It shows that support is getting eaten down at, and then you're also getting the lower highs. So this was something that I've been watching very closely, is this threshold, because if you have a head and shoulders with a bearish neckline, in general, if it confirms, it breaks down hard and fast. Generally, the bottom just falls right out when you confirm a pattern like this. And the reason why I really didn't want that to happen, even though I am short and I'm still short, is the target provided would be down here around $4,200 or so, which would really mess with some of my longer term analysis. I've really been wanting price to find support above 5,800, mainly due to the trend line on the long-term log chart. And if that doesn't happen, then a lot of things start to change from a macro perspective. So I really have been paying close attention to this neckline and very much hoping to get something like we got today. If we got something like this in the other direction, it could have gotten ugly quick, and we still could, end up just creating another lower high here and having like a double right hand shoulder before breaking down. But I think it's much less likely that this confirms now that we're getting a sharp bounce from this instead of a close below, and could potentially even start to get some ideas of like a broadening bottom instead of the head and shoulders. If we do get back above 8,000, there would be pretty good argument to be made that that is the case. As it stands right now, I'm not really expecting that. I do think that the market will be in for prolonged consolidation is really what I'm expecting. I think that consolidating between like 65 and 74 over a few months would make a lot of sense and would allow us to put a bottom in. This just doesn't look at anything like a bottom to me. Bottoms generally occur over long periods of time and low volatility, and this is a bearish pattern. This isn't like a bottoming pattern with the head and shoulders. Maybe it turns out to be a broadening bottom, but that's not what I'm seeing right now per se. But I am thinking things are looking good. And that neckline, that was just such a crucial area for me. If we broke that down, it would start looking real bad. Being that we have supported above it, is definitely starting to make me feel good about the medium to long term price discovery. So quick kind of fractal I'll show that I'm kind of been looking at is how this action corresponds with what we saw about a year ago at this time. As a matter of fact, the third week of December of 2018 has a lot of similarities to this week of December in 2019. So the first thing I just kind of want to highlight is how we sold off in a pretty significant way. We had a low come in that we bounced off of, and then we sold off again. We came back down to retest this low, and what happened when we came back down here is very important, because we came down to retest this boundary, and then we took it out very briefly. This is very bullish. When I woke up, I was like on this candle, and this was looking really, really good to me, because you have this wick that comes below, it swings below the local low. This is where the crossroad occurs. There's either going to be a huge amount of selling volume that follows breaking down that low and causes us to sharply sell off, or there's going to be just some sort of trap where it wipes out the stop losses on the longs. All these longs, people that have been longing in here, a lot had been using that as their stop loss. So we wipe out the stops, and the buyers step up strong. And not only do we wipe out the stops on longs, we also trap in shorters. There's definitely some shorters who are waiting for that breakdown to sell. So this is action that you'll see time and time again in Bitcoin, and it's very important to notice what happens as you test these local lows, and seeing this wick that comes down below and the sharp reaction that follows. Very, very good sign that the demand is overwhelming the supply down in these areas. So let's just kind of take a look at what happened back here in about a year ago today. Is we get the sell-off that follows breaking down the descending triangle. We get a little bounce that doesn't go anywhere. We retrace it. We come down. We put in a low. So this is kind of like the bounce we got when we tested 7,500. Goes up to 10K, breaks down, creates a new low below 7,500, and then that provides a little bounce that goes nowhere, and then it takes out the lows, but only very briefly. Much more time spent below the lows than today, but still, you break down the lows, and there just isn't the spike in selling pressure that you would really expect to see. Instead, it's able to kind of find a good amount of support and go ahead and take off into something like this, where if we go up and test like 8,000, that's kind of what this would look like. Even if we kind of peter out around here, we're still going to have a lot of similarities. So we can do something like the bars pattern, and then notice, so that there was this trend line right here that we took out the lows, the local lows, and then we proceeded to break through this trend line. So that's where I'm going to start my bars pattern. Go the other way. And we'll just include that for fun. Okay. So we notice there was kind of a trend line we saw that was taken out, and that's where the bars pattern was started. So we'll kind of say that that's the trend line, and that's where this starts. So yeah, just like I was kind of seeing mentally, was that a rally up to like the 8,000 would make it look very similar to that prior action, and then something like this to follow would make a whole lot of sense. And this is why I just do not think this is time to buy. Instead, we need to have some sort of bullish reversal pattern, some sort of prolonged consolidation, some sort of moving average crossovers, the first spike following the sell-off is just not, it's generally the time to sell. It's not a time to buy. So this is something that even if we do go up from here all the way to 8,000, it's still not going to be appealing to me at all. If we, instead of doing what I've outlined here, do something like come up and like maybe do like a bull flag and then confirm that, if we do something like this, okay, now maybe we're talking. But on the first run up, you have to see how the market reacts. Is it going to, are sellers going to step in a big way and give us another one of these big wicks that we have been seeing, where you just get a huge wick on top of the candle and sell off from there? Is that what's going to happen? Or do we just tear right through resistance and then proceed to consolidate into some sort of bullish continuation pattern? It may mean that you, so let's say that this happens, and I end up, saying that this isn't the time to buy, and then instead look to enter like on the confirmation right there. That would result in a much worse price than down here, but that's the better trade. Like if you're going to run it 1,000 times and somebody has the strategy of basically buying when what could still just be a lower high, or betting against the trend because they're trying to catch the bottom, they're afraid that they missed out on the bottom, so now they want to jump right in. That's the strategy versus somebody who is going to wait for the trend to reverse and wait for more confirmation from some sort of bullish pattern or something along those lines, and then you get a worse price, but your strike rate is going to be much, much, much better. You're going to be managing risk much better because you're not going to be betting against the trend, and you're also going to be more calculated. You're going to be more, instead of reacting, you're going to be more proactive. And that's, for me, a very, very crucial part of technical analysis and trading as a whole, is to not be the one that is reacting to these moves, but more being proactive and staying with the trend. And the trend is firmly down, and until that changes, I am absolutely going to continue holding on to my short. I have covered about 40% of it. First time I covered was off of this right here, and I covered about 20% there, and then I covered another 20% at 6,600 down in there. So this is what I've been waiting for. I wish I would have been able to do this stream about 30 minutes before I did, because man, that just came right up to my key areas of resistance. Was that 7,400 level and also the 200 EMA on the 4-hour chart. I think last time I streamed, I think it was following this, and I mentioned how it was a bummer that we didn't get up to test the 200 EMA, because that is generally what these moves will do. If you break through the 50, it'll generally go to the 200, and that when you test the 200 is a great opportunity to add onto the position. So it looks like I may have missed my opportunity, but that's okay. It happened very quickly. It's kind of a bummer, but generally when I'm trimming in situations like this, I'm looking to add back on when we retest the 200 EMA, if not all of it, at least some of it. So this is definitely an area that I love entering when the price tests the 200 EMA on the 4-hour chart. That specifically when there's a good spread with the 50, when it's significantly below the 200 and you test that, that is going to be very strong resistance. So that is basically what I was looking for in this bounce. I wish I could have ahead of time outlined a few of these things. But what are you going to do? So that's basically what I'm looking at, is holding on to my short as long as the trend is bearish and the moving averages are bearish basically on every time frame from the 1 hour to all the way up to the daily. So here is the hourly. Will be interesting to see if that does pull back into a golden cross. That would be pretty bullish, but for now, most important moving average for me is definitely that 200 on the 4-hour chart, and will be very interesting to see, and that's why, this is exactly why I don't think this is the area to buy. This is resistance. When you have moving averages that are moving down, they're resistance. And it's a bear trend. You don't want to buy resistance in a bear trend. That's as bad as it gets. Buying resistance is bad enough, but if you're doing it in a bull market, if you're able to wait for a few days, you're probably going to be okay. But if you're buying resistance in a bear market, that is as bad as you can do, basically. And just to kind of show what I outlined before with something like this, look what would happen if we did do that. I don't expect it to happen, but if it does, if we break through that 76 and turn it into support and consolidate into a bullish pattern, well, that's what that's going to do, is allow the EMAs to first flatten out and then come together and then likely get a golden cross. So if you have a bullish pattern on top of the EMAs as they're reversing and getting a golden cross with the price near it in a bullish pattern, now we're talking. Now that's something you can buy. That's something I would definitely buy. Whereas right now, when you're just running into resistance in a bear trend, that is, like I said, it's a selling opportunity. It's not a buying opportunity, and it wouldn't become a buying opportunity until you spend enough time above these moving averages to allow them to reverse. It takes time for these to reverse. When you've got these spread out, it doesn't happen generally in the blink of an eye where these reverse. It takes time, and generally that time occurs with sideways consolidation. And let's see here, I'm not sure what happened to that bars pattern. What did I do with it? Let's just put that in again real quick. Okay. If we get something like this, that would give us enough time to flatten out these moving averages, and then what would happen is, say this is the 200, it would flatten, it would be resistance, and then it would turn into support, and the 50 would then be able to make a bullish crossover, something like that. Right, so that's what I'm wanting to see, is a prolonged consolidation that gives us either a bullish reversal pattern, well, actually both. Like, I would want to see a bullish reversal pattern and a moving average crossover, very similar to what we got down in here. So first we broke this trend line, we shot up and found resistance from the 200 right in here, and then we came down, we struggled to kind of flatten those out and get across, and maybe it did momentarily but failed, and then finally in here we turned the corner, got above the moving averages, spent time above the moving averages, formed a bullish pattern, and then got a moving average crossover. And then the next tests of the 200 EMA became great buying opportunities. Now it's a bull trend, and this is support. So I'll be buying support in a bull trend versus buying resistance in a bear trend. Okay. So that's what I'm looking for right there. And the reason why is primarily due to longer term outlook that was provided, I believe, 2 videos ago. I talked about hyperwave update and that sort of stuff. Let's go ahead and take a look at that real quickly. Okay, that looks about right. So this is basically, this is the chart that has been the foundation of my analysis over the past few months, is wanting to see a return to this trend line and ideally have that come in confluence with a return to the horizontal support. So in the last stream, there 2 streams ago, I believe, I think we were up around in here, and I did something like that. And that is still absolutely what I'm wanting to see is this doesn't look like much time, but in reality, if this happens, that would be multiple, like 3-month kind of consolidation and accumulation down in here, and then what we would preferably see is that right around in here is where price would be moving up and starting to turn the 200 EMA into support on the 4-hour, and you would expect there to be a cross right in here. This is what I'm dreaming about, is basically getting a beautiful buy signal, getting a golden cross on the 4-hour chart, combined with some higher time frame reversals of the Ichimoku cloud and the parabolic SAR, and having that be in confluence with breaking this bear trend line and finding support from this bull trend line. That is, like I said, basically what I'm dreaming about. If we can put in a nice kind of rounding bottom or maybe ascending triangle off of this area of support and do that over a few month time period, and then that would allow us to have some major trend reversals. That would start to turn the trend bullish. Oh, geez. Okay, and now we're frozen. Okay, hopefully. So right in here is where we would start to get some reversals of some medium and even long-term trends, and that would be confirmed with a breakthrough of the basically what is a parallel channel or a bear trend line right here. Okay, hopefully that doesn't give me any guff. Alright, there is a nice chart that I am wanting to share. This is from a new member of the Telegram group, so that's great, and somebody whose charts I've just recently been seeing and I'm really liking. They're very much in line with how I like to look at charts, specifically longer term fractal type of stuff. So what he did with this, and his name is Dragon on Crypto, so go give him a thumbs up on TradingView. Dragon on Crypto. So what he did was overlay the 2014 bear market with the top of this recent run up in 2019. And I didn't think about making previous bear market comparisons with that top, just because like we didn't even create new all-time highs. It wasn't even a real bull run as far as I was concerned, so I didn't think about comparing previous prolonged bear markets with the action that we just had. But man, does this thing line up very nicely. The red line is what happened in 2014, and then notice how the bottom is very, very closely in line with what we just saw. So he posted this when the price was back up around 72 or something like that. I can't see exactly. I guess the fractal goes over too far, cuts out the price, but basically this was posted maybe a week or two ago. Price was around 75, and notice how the red line, it comes down and it breaks down below this low, but then it quickly finds support and bounces up and gets a big run up before a correction, and then prolonged consolidation that allows kind of trends to reverse, and being flat going into the halving and then taking off on a big run up after that. This is what followed the 2014 correction. That makes a whole lot of sense to me, just kind of what I was outlining. Maybe this consolidation would be a little too long, because what I would want to see it do is consolidate sideways into that bull trend line on the log chart and then take off from there. And if it did go for this long, that may end up violating it, going right through it sideways. Oh, geez, of course. Ugh. Okay. So yeah, I don't have that trend line up anymore, but yeah, if it goes for too long, then it could violate it just going sideways. But that is something to keep an eye on, and I do want to pull that up for myself because there just are a lot of similarities there. Let's see here. Okay. Is that the earliest it's going to let me go? Son of a gun. All right. Well, I will probably be wrapping it up here. Let's see if I can get that 2015 bottom up on the chart. Okay, so it's definitely a big swing low. Like, this isn't a trap like we just saw. Like, that actually made another big leg down from this horizontal. It didn't just peak below and then take off. So this is actually what you kind of expect to see, is, you know, a big breakdown after horizontal. So not the exact similarity I was hoping to see, but still would make a lot of sense for us to do something like this, going into the trend line and then finding support there. Okay, I'll take a quick look at the chat and then we'll call it a day. Okay, having some issues with computer freezing up on me, and can't see the chat, so I may end up just calling it a day while I try to get that to load. Did just want to mention that we'll not be planning on doing many streams over the next couple weeks. I am leaving town the day after tomorrow for Christmas, taking the RV to California. Going to be camping out on the beach with a lot of good friends, and then my family is also there, so I'll get to spend Christmas with friends and family. So that's going to be excellent, but won't be conducive to live streaming, so glad I was able to do this today, and then it probably will be maybe even a couple of weeks before the next one, and then at the start of the new year I'll plan to get back into a good routine of regular streaming. See Fiboswani in the chat. He says my Elliott wave still shows down. That's good to know. I think that that is good to know, but I am not sharing that viewpoint myself. Okay. What's your view on ETH? It's a piece of garbage going down. I'll real quickly share a chart. As long as my computer doesn't freeze. Okay, can you handle it? All right, so here's the channel that I'm looking at on Ethereum. It has been following it very nicely and appears to be bouncing from support here. So this is the basically primary chart pattern for Ethereum. As far as I'm concerned, I've been calling for double-digit ETH before the end of the year for months now, and I'm starting to revise that. I do think that it may take a little bit longer. I'm still definitely expecting double-digit ETH, but I think it may take until Q1 or Q2 of 2020. For whatever reason, this isn't letting me show. Maybe I need to zoom out. So this is pretty much what I'm expecting, is a retest of the local lows at 80 and following this bear channel down to there. So put this together back when we were right in here, kind of forming this bear flag type of thing, and was looking for price to return to the bottom of this channel, find some support around 120, and then bounce up to 150 to turn prior horizontal support into resistance and continue following and respecting this channel, and then from there a breakdown to the 80 level sometime in the beginning of 2020 is what I'm looking at. And then ETH BTC, just recently got a sell signal on that, so have been starting to short, to reopen my shorts on ETH BTC. It looks like it's in a good spot to sell as far as I'm concerned, so definitely looking forward to building that position. I guess real quickly we can go over it, why not? My computer is wanting some time off, I guess. Would be great if we could get this thing real quickly So yeah, what I was really wanting was a descending triangle to form like so. I was really wanting this to bounce from here, retest the top of that, and then break down. But that didn't happen, and instead we broke down support, and I did get a sell signal. So that was the support. So I have started to enter. I had orders set. Basically, I'm wanting to enter right in here on a throwback to retest support for resistance. I entered partially, maybe 20%, and then I have orders layered up from 0.0188. I just barely missed that last move, so that's sure a bummer. So from here up to here is where my the majority of my orders were set, and none of those got filled. So just have the original 20% or so that was entered, and if we take out this low, I might just go ahead and add. Am wanting to get some sort of bounce. I don't like entering after this, a major move occurs. Like, this is not something I generally like selling. I want some sort of bounce, but often the best signals occur when the market just completely takes off and basically leaves everybody behind that's waiting to get in on a counter trend move. Okay, I think that should just about do it. One more look at the chat. Okay, I think that's going to do it. Thank everybody for tuning in. It's definitely always fun to look at some charts and share my thoughts, specifically when the market is moving and not just going nowhere, doing nothing. It's definitely a pleasure to analyze volatile markets, and Bitcoin is the most is my favorite asset to analyze and also to trade and also to invest in. So everything comes together for me enjoying my time spent analyzing the price of Bitcoin during days like today and the weeks that we've had over the past week or so. So I wish everybody a happy holidays. Like I said, will be traveling on Friday. I don't expect I'll be doing any streaming, maybe even until the new year. Thank you everybody for your patience with me when I'm not around, and I always appreciate everybody's kind words, reaching out, asking me, to provide some analysis and to jump on a stream, that sort of stuff. So thanks everybody for your feedback, for your support, and for following, commenting, and hitting the thumbs up button before calling it a day. All right, thank you again, and I will plan on catching up with you next time.